Yo, what's going on, guys? This is your boy Trillionaire Mac back with another banger. So in this video, we're going to be breaking down gold, okay? I'm going to show you guys the best confluence entry that you could have possibly taken using the information within my institutional trading course, okay? Trading course is an absolute monster. I've been getting so much feedback from you guys, especially from all the new students that have signed up this year, and I'm super excited that you guys have been able to continuously pass your FTMO challenges. Honestly, when FTMO first came out, I didn't think that we would have this amount of consistent students passing the challenge. But with the course information, you guys are doing phenomenal. You guys are doing absolutely fantastic, and I'm super proud of you guys. All right, so we're going to break down the gold trade as it relates to the course information, basically showing you guys with the course information what you can expect and what you can apply to the charts. Okay, now this was an M1 confluence entry. Okay, there are two ways to take entries: risk entry or confluence entry. Or double confluence, double confirmation entry. That's another one, but we're not going to get into all that. That's within the course. But we're going to break this down from top to bottom. I'm going to explain to you guys exactly what you can be expecting, not only from the course information, but also from me as your mentor. All right. If you're not subscribed to this channel, feel free to hit that subscribe button. Hit that bell notification icon to be updated whenever I upload a new video. The last video we uploaded, I actually shared with you guys a recorded webinar of a question and answer session that I had with my students. If you haven't checked that video out, feel free to go check that video out. Leave a like on it. It's 50 minutes long. It's chock full of information. Don't sleep on it because I don't know how long my team is going to allow me to keep it public. They don't even know that I've uploaded that yet, but let's hope that they don't find out. All right, so with that being said, sit back, relax, and let's get into the video. Alright, so of course we're going to start on our macro time frame. So for this trade, my macro time frame of choice was the H2 time frame. Now, if you're not a part of my Telegram community, link is in the description down below, Trillionaire Mac Trade Spot. If you're not a part of that, then of course you're not really going to know that this was beforehand, but all of this was beforehand. What I told the Telegram community, okay, my trading community, I told you guys to wait for price to push up into this region, which was already denoted last week around, I want to say it was around January 6th. January 7th is when I told you guys to look for price to reject this area right here to catch a trade, which we were able to. All right. I wanted to see price trade into this region here. Now, if you don't know why I selected this region on my macro time frame, feel free to check out my previous video regarding supply and demand concepts. Okay, that is going to be a very, very important video, as well as weak highs versus weak lows. That is going to really explain to you guys and help you guys understand why this was the point of interest that I wanted to see price trade into to get a quick rejection. Whether it be a quick rejection like this or whether it be a rejection that falls all the way down here. Okay, those two videos are going to assist you with understanding why I did what I did in this case. All right, so once price actually pushed into our macro zone here, that is when price gave us permission essentially to go down to the lower time frame. So let's go ahead and skip down to the M15 and let's start to look for our confluences. Now remember, we didn't take our entry on the M15, but we do need to utilize the M15, or in this case the M12 actually, since the H2 is our macro. We do need to utilize these time frames in order to really see what price is doing. All right, let's stick to the M15 for the time being actually, because I know some of you guys may not be able to add 12 minutes, but you guys definitely have 15 minutes, so we'll stick with the M15 because I really want you guys to utilize this on your own charts. Let's get rid of this really quickly for the time being. We'll get into that in just a second, but let's look at the M15 time frame. So on the M15 time frame, what we're looking for was we were looking for price to tap into this zone here. Now, of course, I told you guys that, or I told my students, excuse me, not you guys, but I told my students that more than likely price would continue to push to the upside and push a little deeper within this zone. But remember, you can always catch some type of trade off of a reaction to your macro zones. Okay, so if price taps into that region and then rejects, you can still catch some type of trade opportunity and collect some type of percentage. Just don't expect price to fall out of the sky. All right, so we can see that here we have instigated highs. We have essentially sellers that try to come into the market and then demand that overtakes sellers after we have this stalling price. With price moving above this region here, that is going to be our sweep of liquidity. We have liquidity resting above this region here, and then price essentially sweeps it, right? So we know with these red candles here, okay, with these essentially doji candles, what you could call it, we know that there had to be some type of demand to come into the market in order to sweep this liquidity, overtake sellers that tried to win in this case, okay, and push price to the upside. Now, I had my alert set around 1825, 3, 4, 5, right? And if we look at what price tapped into, if we put this horizontal right here, we can see that price tapped into 182.350, right? So we barely tapped into this zone, but because of the confluences that I'm about to go over with you guys that essentially told us that price possibly wanted to move to the downside, which it did, which we were able to take a confluence entry. So price pushes to the upside, right? We push back to the downside, okay? We interact with this demand here. We create a failed reaction. Price moves back to the upside, all right? And then we finally take out this failed reaction here and also giving us a change of character from price going within this uptrend to the downtrend. Now, what I just said may be confusing. So if you're someone who has access to the course information, Chapter 2 is going to break down everything that I just broke down. And what you guys should be doing is not just applying the course information to your charts, but also check into the YouTube videos, see how I'm applying it, and then if you've missed anything on your end, then go back and fill in anything that you've missed and continue studying the course information in order to figure out where you're going wrong. All right. Also, I want you guys to check in this month. We are going to have another video uploaded to the advanced lessons, of the course. All right, remember this course is an interactive course, which means I will be updating material along the way, especially as little things change within my trading style that can help you all. All right, so definitely check that out. So let's move this out the way and let's head back to the charts. So after price had created this failed reaction and pushed to the downside, within this entire area here, I mean, you can clearly see it based off of this wick, but this wick essentially is the last area where sellers came into the market or buyers came into the market before sellers took over. Not only are we using this wick, as a supply area, but we can also see that this area sweeps liquidity above this high here and also mitigates this region here, which is a previous mitigation of this region here, right? So everything is lining up, everything is being mitigated. We knew that price was going to continue moving to the downside if we saw our valid entry confluences. Now, one thing you can do, which I do teach in the course, is you can take an entry based off of this region here. And I think I pulled this off of the M12 time frame actually. You can definitely take an entry based off of this here. I don't always take M15 entries, okay? You absolutely can, but with assets like gold, okay, I try to take M1 entries, mainly because I want to get a small stop loss, right, to improve my return on investment. As it relates to currency pairs and things like that, I do take risk entries on the M15 time frame or the M12 time frame, unless I'm day trading. But when it comes to gold, I'm always going to try focusing on that M5 or M1 time frame to catch those trades, okay? So definitely keep that in mind. Once price pushed up into our point of interest, which was here, let me fix that up, which was here, okay? Once price pushed into this area, essentially within this area, that is when we started to look for our entry confluences. So if we back this up just a little bit, all right, just so we don't have to keep scrolling on the M1 time frame. If we back this up, we can see our entry confluences are present here. So what happened? Essentially, price trades into our M15 zone that we have marked up on the higher time frame, which was here. This was our M15 supply that was responsible for flipping our M15 demand here. When price trades back up into this area, you're just looking for your entry confluences. So price trades into this region, okay? We have these collective highs here. Price sweeps those highs. Okay, we push to the downside, we interact with demand just a little bit, creating a failed reaction, and then we take it out with a change of character. All we're waiting on is for price to either come back to a decisional or the apex of the entire move. Now, the apex of this move, let's move this out of the way, is right here within this area. And I actually had a session with a couple of students yesterday, a one-on-one session with a couple of students yesterday, and I told you guys, if price pushed up into our M15 zone and gave us our M1 entry confluences, which is discussed within the course, all you have to do is click on entry method, okay, and watch this video here, and that's going to break down exactly how I take my entries. And unless you aren't looking for the confluences that are talked about within this entry method video, okay, if you look for all of those confluences, then you're going to be on track every single time. So be sure to go check out that course, and also let me know what you guys think. The ones that I've already have it, guys, keep sending me those profits, keep sending me those past FTMO challenges, and keep sending me those withdrawal statements. I love to see it. So after all those confluences take place, this apex here is essentially the supply that was responsible for taking out this demand here. So essentially what we did was we waited for price to trade back into this supply, and that is where our entry was taken. Now, this entry took place around 1:21 in the morning. I know that's kind of early. If you're a student of mine in London, then you guys were definitely able to catch that. But if you're a student of mine over in the States or over in Canada or Jamaica or even the islands, the Bahamas, you guys may have not been up at that time, and that's completely fine, right? Because the market is always going to give you guys new opportunities, new entries, regardless of what has already passed, okay? So if you did not catch this, okay, if you're not in London and you weren't trading London session at that time, no worries whatsoever. But my students in London, man, I'm loving the profits you guys are sending me. And I know for a fact I had students in the United States, if you're here, or even in Canada. I know for a fact I had you guys catch some of these trades, especially because you all were on a session with me last night. All right, so you should have definitely caught this. All right, so once price tagged us in, remember, I always like to use round numbers. Okay, so by the time you put your stop loss up here, I think it was a little less than 2 pips, but we simply just rounded up to 2 pips. Okay, I'm always going to use a whole number or a half number, and I'm never going to round down. I'm always going to round up. After that, our target, or a target you could have used, let's go back to the M15 time frame. A target you could have used, okay, for a swing trade could be here. But if you look in this area right here, we're seeing some type of demand that came into the market, okay, that overpowered supply here and had price move to the upside. This demand right here could definitely be tested for price to move higher within this zone, which is also something that we touched on those one-on-one sessions, right? So if we go back to the M1 time frame, we can see that if we're targeting the area stated on the M15, this zone here, that's going to be around 28.88%. If you were in this trade and you took your entry, you had no drawdown, maybe a little bit, maybe half a pip or so, and the rest was history. Price continued to fall to the downside throughout London session. I want to also explain to you guys session timing. So I'm going to release a video for you guys, breaking down session timing just a little bit for my YouTube subscribers, all right? So if you're not subscribed, be sure to subscribe to the YouTube channel and hit that bell notification icon to be updated when I drop that video, because that's going to be something you don't want to miss. But one thing about session times that you're going to have to understand is usually London will give you an entry and a continuation, then a reversal will take place, then New York will give you a continuation or another reversal, okay? Now, if you don't understand what I'm saying, that's completely fine. Just subscribe to the YouTube channel, and when that video releases, it's going to give you utmost clarity on exactly what I'm meaning by that. But one thing about it, if you take an entry on gold during London session, you're going to want to be careful of the New York reversal, okay? That's just how the sessions work, okay? And that's just how the timing works, and that's something that you guys want to keep in mind. So if we, let's go back to gold. My apologies, guys. Here we go. And if we go back to that area, we can see that, of course, price tapped into our take profit, returning 28.88%. All right, if you had an FTMO challenge and you took this trade and you're only risking 1%, this would have been either minus 1% or in this case, plus 28.88%. Remember, in order to pass an FTMO challenge, you only need 10% return on investment, okay? And then for the verification, you only need 5% return on investment. That might seem like a daunting task, but guys, we've had so many students and so many individuals pass FTMO challenges based off of a simple strategy that I'm going to give you. If you're someone who's having trouble passing your FTMO challenge, I want you to join my mentorship program and I want you to contact me. Tell me that you are practicing your FTMO challenge or trying to pass the FTMO challenge, and I'm going to set you up with an entire blueprint regarding psychology, regarding the trading plan for you to use, regarding the mechanics of that trading plan, regarding the timing that you should be looking at the charts. And if you're someone that can follow a 1, 2, 3 step process, then you are going to be successful at trading. Now, if you're not someone that can follow a 1, 2, 3 step process, don't contact me. Don't worry about it. But if you're someone that wants to improve your effectiveness and efficiency on the chart, and you can follow 1, 2, 3 steps, then I want you to contact me. I want you to join my mentorship program, and I'm going to give you access to my course for the next 5 individuals that join my mentorship program. What I'm trying to do is I'm trying to reach those individuals that need my assistance. A lot of my students, you guys are good to go. You guys are flourishing. You guys are making withdrawals. You guys are withdrawing profits in order to fund your business ideas, in order to fund your parents' vacations, things like that. Now I'm trying to reach those individuals that are still having trouble producing results the world is not familiar with, and those are the ones that I want to assist. This is Trillionaire Mac. I'll catch you guys on the next video. If you enjoyed this video, feel free to leave a like. I mean, it's a 28.88% return. How can you not enjoy that type of return? I'll catch you guys on the next video. Much love. Peace out.